Ravi, Tommy, thanks for joining us today on the Hoxton Live podcast. And today we're going to talk about why pensions matter.
Yeah.
So, why do they matter? Ravi.
Go on, Tom.
How long have you got? How long have you got? So I suppose, look, for most people, outside of their property, pensions are usually their biggest asset. A lot of our clients have worked in the UK for a long period of time, contributing into pensions, and for most of them, it's going to be a huge part of their retirement planning, essentially. So it's really important you look into them.
So what is the sort of long-term impact of pension planning then? Let's go into detail on that.
So I guess obviously it depends on the jurisdiction that you look at, but most of our clients will typically be originally based in the UK, then they'll move internationally, whether it's the GCC, US, Europe and Australia. If you look at how pensions were formed, previously most companies used to offer individuals defined benefit pension schemes, and that was, one of the ways that they would entice that individual perhaps to come to work with that company. Then over time that got transitioned out, and we've got the newer style pensions, although they've been around for quite some time now, which is your defined contribution money purchase schemes. And effectively the way that works is an individual would pay money into that pension scheme on a monthly basis, which will come out of their salary. Then their employer would typically match that. And I think if we didn't have that element of structure, then there's going to be a big gap, and realistically people would likely have to work until, they're in their 70s, and, that then doesn't allow them to have that freedom and flexibility to retire. So I think they're an integral part of somebody's financial plan. So the importance of investing regularly on a monthly basis, it's a given. Unfortunately, clients out here in the GCC, you're kind of left to your own devices. And that's where Hoxton and, it's guys like myself and Tom would come in, just educating clients, the importance of not ensuring that there is 2, 3, 4 years of gaps in those provisions. Otherwise, you're going to have to either invest aggressively or take a lot of risk to try and bridge that gap, and most individuals aren't comfortable with doing that.
Or cut your cloth accordingly, or work longer, which probably no one wants to do, right?
Well, let's look at the GCC. Okay, so people come out here. They might come out here from the UK.
Yeah.
They come out and they maybe work for a company. They might even set their own business up. What do they need to consider when it comes to pensions and retirement?
Yeah.
When working, say in Dubai, for example.
Yeah. I think, like Ravi said, the importance of saving it's absolutely paramount. But you also need to understand what you think your future is going to look like, and work backwards. We have people come to us and say, how much do I need to save? But it's very difficult to understand that if we don't know, how old you're going to be when you retire, what jurisdiction you're going to be tax resident in, what level of lifestyle you want. So, these are all things that people need to be looking at.
Pensions. When you close your eyes and you say the word pensions, it conjures up an image of somebody who's old, right? That's what a pension is, isn't it? It sounds old, doesn't it?
Yeah, these ads that they used to run on the TVs and online now.
Yeah, Saga or something like that, So when is the right time for somebody to actually consider a pension, and when can they start contributing to a pension?
I guess the main importance of that is, yes, it's a pension, but it's a tool which will allow you to have freedom and flexibility to stop working. So although pensions are, for most individuals in their 20s and 30s, they don't think of paying into a pension. I've got a lot of friends back in the UK that ask me, should I be paying into my pension right now, or should I wait until later life? Obviously, the earlier you can start, the better, primarily due to compound interest, which is classed as the eighth wonder of the world to a certain extent. But yeah, the earlier you can start, the better. And it just allows you to have that element of freedom and control.
I used to work for a pension provider, and I was always blown away by the fact that the stakeholder pension at the time, you were able to set one up for your child. Literally, as soon as they were born, you could set up a pension plan for your child. Is that still the case?
Yeah, there's lots of different structures that you can set up. You can set up pensions, junior ISAs, there's lots of different things. But I think the main crux of it is that people need to get into good habits and start saving early. And it just takes that pressure. I used to use something called the retirement mountain. It's a graph that I used to draw. And it essentially showed that, the later you start saving, the steeper the mountain gets, i.e. the more you need to save on a monthly basis or on an annual basis. So when you highlight these things in that way, it really gets people thinking and, understanding that the sooner I do this, the better.
Yes, people can put this off, can't they? They don't think about it, and time moves very quickly. I can't believe I'm 43 years old already. Have I got enough in my pension for my retirement? Should I have done it earlier? Yeah, definitely. I should have done it earlier. So, what are the benefits of those regular reviews of pensions, those regular reviews of assets when it comes to pensions?
It's like everything in life, you should be reviewing where you are currently right now, and now's a perfect time. The beginning of the year, most people, they're reviewing their health goals, but a lot of people can put finance goals off because it is a bit of a difficult topic. The other consideration is they don't know who to speak to, especially out here. In the UK, it's, as I said, pensions are a given. You might have a pension advisor within your company, where most of the companies out here, they're global companies, and they might not have that element of infrastructure. And it can be quite a daunting conversation to have, trying to find a regulated and a qualified financial advisor and a trustworthy, incredible company to deal with. So it can easily be a conversation that you can kick down the road days, weeks become months, and then, but it could be 3, 4, 5 years into your time being out here. And unfortunately, we've also seen it with clients. We've been out here for 7, 8 years. Some individuals have come to us in a worse off position than they originally came here, 5, 6, 7 years ago. So the earlier you can have these conversations, the better, typically.
Yeah, and I think if you look at any part of your personal finance, most people review them. You probably look at your bank account quite regularly. You look at fixed deposit rates quite regularly. You look at your health insurance, what that's costing you, life insurance, these types of things. But weirdly, people don't look at their pensions quite as much. I have regularly have first meetings with people, and I'm like, when was the last time you looked at this? They either don't know where their pension is, or they don't look at it, every 1 or 2 years. They look at it every 5 years, for example. So it's like any asset or any part of your personal finance. You need to be reviewing it and making sure you're in the best possible structure, and essentially getting the best thing for your money.